Welcome to Alpha Recap. Thanks for joining us after the close. Today we're unpacking a clear risk-on session where small caps and big earnings stole the headlines. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. It was an interesting day, broad participation, and a lot to chew on from both the earnings front and sector rotations.
So let's start with the top line. Markets closed up broadly. The S&P finished the day up about 1%. The tech-heavy index was up just under 1%, and small caps led the charge, finishing up about 2%. Those numbers changed the tone of the tape, didn't they?
They really did. When small caps jump by that much in a single session, it signals more than a few traders chasing momentum. It points to rotation, money leaving some longer duration names and moving into cyclicals and mid to small cap sectors that responded to strong corporate news.
When you step back and look at the drivers, the two names everyone talked about were Eli Lilly and Caterpillar. Tell us why those results mattered beyond just the two stocks going high.
Right. Lilly's blowout quarter and guidance raise was the classic earnings story that gives analysts and algorithms confidence to re-rate a whole sector. It wasn't just a beat. The company showed margin leverage and product visibility that suggested near-term cash flows could improve. Caterpillar offered similar clarity on order books and pricing power, which fed through into industrials and materials. So those two results created tangible reasons to rotate into cyclical exposure.
And that rotation, it was pretty noticeable. Communications and media names also popped after a streaming beat. Roku led that bounce and pulled others up with it.
Exactly. Streaming and ad-exposed names rallied after constructive user and ad commentary. That lifted the broader communications complex, which added to the breadth of the market rather than concentrating gains in just a handful of mega-cap growth names.
Honestly, I was a bit surprised by how broad it was. Utilities even saw selective flows. Renewables and nuclear-exposed names got attention, while traditional regulated utilities lagged.
Yeah, that tracks. There were pockets of conviction in places you wouldn't expect on a pure risk-on day. Real estate tied to new construction also did well, reflecting some positive development updates.
Let's pause on the why for a moment. Analysts are pointing to two broad forces: earnings surprises with forward guidance, and rotation into cyclicals and smaller names. But there was a policy angle as well. Fed messaging and inflation data, right?
Correct. The recent inflation prints and Fed commentary have left the central bank in a data-dependent posture. The way the market reacted today suggests participants are leaning toward growth, not renewed disinflation, determining the Fed's next moves. That nuance tends to favor cyclicals and shorter duration assets.
So the market treated the day as consistent with a higher for longer but patient Fed stance. That's a helpful shorthand.
Yes, and analysts note that sustained demand and wage pressure make an immediate easing cycle less likely, even if traders aren't aggressively pricing fresh tightening. It's subtle, not a dramatic change, but enough to shift preference toward value and cyclical exposure.
Quick reactions. Small caps win. Tech heals a bit. Cyclicals catch a tailwind. Short segment. Quick takes?
Small caps showed conviction. Tech didn't get left behind entirely, and cyclical leadership was the day's story.
Let's dig into sectors. Walk me through winners and laggards.
Communications and media rallied after the streaming beat. Healthcare was strong thanks to Lilly, which pulled in broader pharma and selective biotech names. Industrials and materials benefited from Caterpillar and some supply tightening signals in mining. Small caps, as we said, led. Energy was volatile. Some oil names pulled back on profit-taking, while certain exploration and production and EV supply plays moved higher. Cannabis got hit by renewed policy uncertainty, and real estate tied to development saw pockets of strength.
Right, and the cannabis pullback, that was noticeable. Policy headlines really hurt that group.
They did. Where sectors depend on regulatory progress, headlines can quickly flip sentiment. That's the risk. Even when broader markets are constructive, headline risk can create sharp, idiosyncratic moves.
A couple of individual names stood out beyond Lilly and Caterpillar. Roku we mentioned. Nvidia had a headline that tempered its advance. Intel kept its momentum after execution updates. And there was crypto-related news around Gemini expanding derivatives activity, which produced idiosyncratic moves. Any color on those?
NVIDIA's episode was a reminder that even leaders face headline sensitivity. A single development can mute enthusiasm. Intel's continued focus on foundry and product execution has been getting positive attention. Analysts are watching whether the execution narrative sticks. And Gemini's approval to expand derivatives activity sparked renewed interest in exchange and infrastructure plays. More institutional derivatives could mean higher volumes for some service providers.
Wait, really? Gemini got approval to expand derivatives? That's the kind of news that can shift flow into infrastructure names.
Exactly. It's an example of how regulatory and product developments in crypto can have outsized effects on a small set of companies, independent of broader market moves.
Okay, shifting gears to macro implications. If earnings are holding up and demand looks resilient, what does that mean for the Fed path and market positioning?
Markets interpreted the beats as evidence that earnings momentum, combined with resilient domestic demand, could keep the economy hotter for longer. That complicates an easy path to rate cuts. Traders are nudging down the immediate chance of cuts, but they haven't assumed fresh tightening either. So positioning favored cyclicals and small caps today, while tech remained in the picture when earnings justified valuations.
Which macro prints and Fed speakers are you watching next?
Near-term labor market data and upcoming inflation measures will be critical. Also, the next round of Fed speakers could either reinforce today's higher for longer but patient take, or trigger a repricing if someone leans hawkish. Those are the items that will determine whether this rotation sticks.
Let's touch on technicals and historical context. How did the tape look from a breadth perspective?
From a technical angle, breadth improved. Seeing the S&P up about 1%, the tech index similarly, and small caps up about 2% in the same session is classic risk-on, breadth-positive action. Historically, that pattern underpins multi-week advances when supported by fundamentals. The notable point today was the magnitude of the small-cap move. It felt like conviction rather than tentative reallocation.
Short reaction segment.
Big move, not what everyone expected.
So what are the key watch items for the next session?
More mid-cap earnings, especially in consumer and industrials. Continued upside there would reinforce the rotation. Fed speaker commentary and labor or inflation prints could reverse course if they surprise to the upside. And sector-specific follow-through. Biotech spillover from Lilly, ad and streaming after Roku, and materials or mining for supply tightening confirmation. Also keep an eye on crypto derivatives flows after Gemini's approval.
Right, and technically, a follow-through day with similar breadth would be constructive. Failure to sustain could invite volatility and reconcentration back into megacap growth.
Exactly. The market rewarded clarity. Companies that gave clearer near-term visibility attracted conviction buying. Where regulatory or competitive risk stood out, selling was more evident.
Let's do 3 quick takeaways for listeners to remember from today.
First, earnings mattered. Clear beats and guidance drove re-ratings in healthcare and industrials. Second, rotation into cyclicals and small caps dominated the tape, reflected by about a 2% small cap gain versus roughly 1% in the broader indexes. Third, macro and Fed context matters. The market is treating this as consistent with a higher for longer but patient Fed stance. So upcoming data and Fed comments will be key.
Those are tidy. 2 quick reaction snippets.
Yeah, absolutely.
And finally, a brief risk reminder. Corporate surprises can reverse. Headline risk remains high in pockets like cannabis and chips. And Fed messaging could flip sentiment quickly. Analysts note these are real risks.
Right. This is informational analysis only. It's not personalized investment advice, and it doesn't recommend buying, selling, or holding any security. It's useful to keep both the upside case and the risk case in mind.
Perfect. Thanks, Kate. That was helpful and clear. I appreciated the perspective.
My pleasure. Always fun to break down a busy tape.
To wrap up, markets closed up with breadth. Small caps led. Earnings headlines from Eli Lilly and Caterpillar catalyzed rotation, and the Fed and upcoming data will determine whether this leg of the rally persists. If you want to dig into any of the names or sectors we discussed, head to stockalpha.ai.
And if you have questions about anything we covered today, head to stockalpha.ai, or you can ask us directly through the Q&A feature, and we'll answer live. For more market analysis and deeper write-ups, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more insights. Until then, good evening.